Hello. How's everybody doing, guys? Great stuff. 50 pips. Well, we're trying to do our little update. It's still Sunday, 18th of November, 2012. And let's see what's going on. Let's see what we can do. I'm going to try and keep it short this week. And let's go through a couple of things. Okay, so first things first, let's look at Kiwi. So what do we got here? Basically, we had a bit of a pressure last week, but you see that we got some very aggressive buyers coming in at these 80.50s, right? So basically, you have to respect this this daily candle, right? We were talking about the fact that this whole support zone here, so 81.30s into 80.50s, was a chop zone, and we'd expect price to be supported here, but it looked a bit choppy. So personally, we were standing back. We weren't engaging in this chart at all. And you see it held. I mean, it's even clearer if you look at a 4-hour chart. You can see how aggressive the bids were at lows. So you have to respect that, and I think the odds are for some kind of a retracement up. And going into the week, what I would be focused on, again, is keep in mind that to the upside, you want to see what's happening into these 81.80s, right? If these offers, you see all these wicks, if these offers that we're capping here are still there, then it's likely that price will hover around this 81.30s, and this will be what we'll call pivotal for Momo line, and we could easily be chopping around this zone for quite a bit of time. Equally, if these offers don't materialize, then I would not be surprised to see us move potentially aggressively back up into the 82.40s, and then that's going to be our bull bear line. If we move to the downside, then if this whole candle is basically no bids coming in and we break back below 80.50s, then expect this to move pretty aggressively to the downside, and below the 80.50s, I wouldn't be surprised to see the next 50 pip move into the 79.90s or 80s to be very, very aggressive if we take out these stops here. But broadly speaking, I think this support needs to be respected, and I would assume that more of the action is going to be centered around this upside to see if we can get a move back into that previous resistance zone. And if not likely, we're going to see some more chopping around in this area. Okay. Aussie, what's going here? So we're sitting on trading this to the long side slightly, and what was interesting is not a lot of conviction on this trade, but basically we looked at this area and we said, you know, the supports are valid. Keep in mind, should we break below, that there is a very strong support below that, okay? And that support is those 0310s into those 0260s. Equally, that was also coming in line with a 50 back of the move from lows to highs. Now, we weren't looking at to trade this as a fib per se, but this was a very valid support zone, and you see that that's exactly where the buyers came in. And again, we've got this daily reversal candle here. So going into the week, I think we need to respect the support equally to Kiwi. I think it's really all about these 0380s, bullish above, bearish below. If we can't break back above that area, well, then I would expect that we see those lows tested again, and then that's going to be a key test, and we're going to be exactly in the same situation where we were when we tested it the first time. However, if we break above those 0380s and we trigger some upside stops, then I wouldn't be surprised for us to move back into those 0440s, 0450s, and that's going to be a very interesting zone potential for swing shorts, or to see if to play some kind of breakout trade. But again, all about 0380s going into the week. I don't have that much to add from last week, because there's really, you know, we've had some moves, but broadly speaking, the big support and resistances are still valid. Going on to CAD, what's going on CAD? Pretty much the same thing. So we looked at trading this short side last week, and what's interesting is that we're just stuck. Much to do about nothing. We're stuck at this parity mark. Just as a reminder, what are we stuck? What are the two moves that are playing out? So we've got these longs that are trying to press these higher, and these longs are basically 97.30s into those recent highs. Bam, the 50 back gets bought very aggressively. And what we said last week is these guys are looking for a hold above the parity mark to try and complete this move into an extension into the 123 that's coming in at 10080s. Okay. However, there is a bigger term setup, which in this case, the bigger the setup, the stronger it should be. Of course, some of the bigger setups will have to break. If not, we never get a trend change. But the bigger setup is the move from highs to lows, and you've got this 50 back short here. This 50 back short was front run once before, and even though a lot of people were very aggressively betting on this to break since the front run didn't hold, the 50 back got sold again and got sold very aggressively. So as far as I'm concerned, this is still in play, and I'm still looking for this to try and move and hold down below that parity mark at the beginning of the week and try to move back down. Similar to what we discussed last week, the broader levels are 101.35 to the upside and those 98.50s to the downside. That's the broader range. The parity is the pivotal mark, and the longs will be looking to move to the upside. The shorts will be looking to move to the downside, and I think both those range extremes are going to be interesting to look for some kind of a fade there. Okay, but especially if we go into the beginning of the week and we hold below that parity mark, expect to see some longs profit taking and a bit of an acceleration to the downside. What's happening on Euro AUD? So Euro AUD, this is a trade we're in. You probably saw me call some of these on Twitter. And what we basically, the hypothesis here that we were coming back down. We broke through the 200-day very aggressively, and we were coming back into a 50 back, lows to highs. And what we really liked about this area, apart from various trend lines some people might have mentioned, we liked the fact that this was a structural support that it held in the past and held very aggressively on a strong move down. So we're looking to get some kind of action here, and as long as this area held, as long as this support area held, we're looking for a quick move back into the 200-day moving average, which we got. Okay, now going into this week, the way I'd be looking at this is that the swingers are sitting and saying, okay, that's it, swing and play, and we're looking for rotation back higher, break above this 200-day moving average this week, hold above it to continue the rotation back up to those recent highs and breaking higher. And on the short side, what I would expect is they're trying to move back down and break below those Thursday lows. Some people might have fib here. I think those Thursday lows are the key. So I would be looking at that as the support going into the week. The strong resistance naturally is the 200-day moving average here. If we break and hold below those Thursday lows, look for this to start to probably trade pretty heavy into that cycle or structural support zone we discussed. But if we break above and we hold above the 200-day moving average, well, then the odds are clearly going to be for a continuation of the rotation back up and for more people to pile in on the swing trade for a move back up into those highs. And again, this is a swing, so it's much longer trade horizon, but moving all the way back into those highs and possibly back into the 131 level. Gold. So a lot of people were getting very aggressively short gold here. In line with a 50 back retracement, highs to lows, this 50 back pure reversal doji here, and we start pressing down. Now I've had a bit of trouble believing this move all of last week. To me, it looks like that gold is pretty well supported still. I haven't really done anything, but you see these wicks coming in. It looks like buyers are supporting, so I'm not going to change my outlook. As long as we hold, there's buyers coming in and bids protecting this 1700 and this bottom level here at those 1698s, I still think the odds favor rotation back up into 1750s. If we break below those 1698s, that 1700 level, then it'll mean that, most likely mean that I'm very wrong on the way I'm looking at this, and we will most likely try and take another stab lower into that 1676, 1660 area. Okay. Now, ES, what's going on the ES? So ES catching a bid at this 61.8 area. Basically, as we discussed these areas on Twitter quite a lot, those 1340s held. So I'm looking for a rotation back higher, possibly into 1380s, into the 1400. Actually, this is our trade chart. Let me just get a clearer chart, a new chart here. Okay, so if you look at this on the daily, basically what's happened, you know, we can make this pretty simple. You've got the move from lows to highs, recent swing lows to highs. We come back very aggressively. We traded it long at the 50 back. We're coming back at, we're trading it long at the 16.8. Anyways, who cares how we're trading it? We're looking at the outlook here. And we said, you know, those 1340s were key. And what you see is that, bam, we held that 1340. So this way this is trading, the longs will be looking for this to hold, potentially for a move all the way back up into those 1478s and higher. But that's a bit early to talk about that now, at least in terms of this outlook, because I'm just trying to give you an idea what to expect the week ahead. So I think the focus point here is, now that we've held there, if you look at the 50 back from highs to lows, right? So the opposing fib, where's that opposing fib coming? The 50 back is coming in at those 1407s. And because those 1400s have been such a key area and we've seen so much action around them, I think that's really the zone we need to be focused on next week, right? So that means hold below those 1340s, very, very heavy. But as long as this holds, I'm looking for this to rotate back higher. Now, you have to respect that daily close. That's a very strong daily close. You know, we had expiry on Friday. Usually price tends to continue in the direction of the way the expiry ends. So it's looking interesting, right? And if you go back to the trade chart we had here, because we have some more levels, I think the intra levels to watch out clearly is, now we're coming up on those previous lows that were support. So this is going to be a key test. But if we start breaking above 1360s, then I think 1380s are the key. 1380s are the key, and then it's all going to be about our offers going to cap. Our offer is going to cap and keep it below 1400. As long as they can keep it below 1400, and expect to see a lot of bears coming in there. That's that you know, to a certain extent, I think the 1400 is more important than the 1340. So expect to see a lot, because we had a strong move all the way back down. So expect to see a lot of bears coming back and pressing that 1400. So if you don't see that happening and we break through 1400, knife through butter, then I think the squeeze could be very aggressive. So again, longs defending 1340s, bears defending the 1400. Let's see how this plays out. But I think the odds here, at least for some kind of rotation, at least into 1380s. Let's look at euro and cable. Okay, so euro. We're stuck inside the box range we discussed. So the outlook really hasn't changed from last Sunday. And what we said is basically we're stuck. We've got a potential front run for rotation all the way back up into 135s. And really these 127.00 to 128.00 is a chop, massive chop range. And don't get excited unless we break outside that range, because we need to see strong momentum outside that range. If not, it's likely just going to chop around there for the week. And what we tweeted at the beginning of last week, as we were pressing down, we were moving into that confluence zone of, if you remember on the day, we had a daily S3, we had the 100-day moving average that was coming in. We had this that 27, so we said we expected that to hold and to see the rotation back up, and that's exactly where what we got. And surprise, surprise, the sellers came in defending the 28s. So again, broader picture, as long as these lows hold, I'm looking for this to attempt this bigger rotation and take a stab all the way back higher to break new highs. However, a lot of people were asking me, where do you think we're really going to break down, or can we get a strong squeeze if we break above 128s? I just want to point to what I said last week. I think the bulls are going to keep on trying to hit this unless we get a daily close sub 126. And equally, I think the bears are going to try and keep on capping this unless we get a daily close above that 129. So that means, exactly like I said last week, a break below 127, I don't expect to see a strong acceleration lower. I don't expect to see a lot of stops hit because I think the defense is lower. And equally, if we break above 128, I wouldn't expect to see a lot of stops layered above that 128, because I think a lot of the shorts are going to be looking to reload between 128 and 128.50s with likely stops above these spike highs, which would mean above the 129. So it's going to be a tricky, potentially, unless we get news or something, it's going to be a tricky week because we're stuck in a box, but we have strong support and resistance either side of that box. So it doesn't mean we won't have good intraday trading opportunities, but the bigger picture, we need bigger moves for that to clarify a bit, okay? Cable, what's going on cable? So if you remember from last Sunday, we said it was looking a bit heavy. 159.10s were key, and if we held above, we expected to see this rally potentially sharply, but equally, if we couldn't hold above, we were looking at to rotate back down into 158.50s, into 158.00. The guys that follow me on Twitter also saw me just basically copy-paste the same tweet all week, and as we discussed last Sunday, I was looking for a move back into that lower support to hold to get into a swing long. So that's where I'm currently sitting, at least. But basically, so we move back down and price is trying to rotate. So exactly the same as last week, all about 159.10s. If we can't break above 159.10s, then expect some longs to start taking profit and expect the price to trade heavy back into these 58.30s. Equally, if we break and hold above 159.10s, then I think the swing long is firmly in play, and I'm looking for a move back into the 160s. There's a lot of different ways to look at those 160s, but even if you're looking at some kind of a channel down, it's interesting. Now, it doesn't mean that we're going from here to 170, right? We could easily be looking for shorts at the 160 level to continue this downtrend, but right now you see this 159.10 is in line with this channel too, so pivotal. Failure to break above, then pressure on to potentially break back down. If we break and hold above this channel, then the odds are that we'll rotate back to test the top end of the channel, the top resistance zone, which are those 160s. Okay? Let's do one last one because a lot of people asked me about this, the chart we posted. So this was a trade we looked at on GPBJPY. So very nice. What were we looking at from a weekly perspective? If you go back, you can see that this is trying to find a bottom. It can't accelerate lower. It looks like a rotation, and it looked to us like it was an interesting trade to look for some swing longs. Okay, so what you do, at least how we looked at it was we looked at the daily, and we said, well, any kind of move back down into this trend line or this tighter trend line, so it's giving us an area, we're looking for potential long setups inside that area. Okay, so move back into a 4-hour chart, and the action was actually very, very nice. What happened? So we break down and we put in a very strong support. We come back, the support holds once again, and we start to rotate higher. Then aggressive selling, very aggressive selling, gap down, bam, we put in a low, and at the next 4-hour candle, we can't take out those lows to the pip it's holding. We get a reversal candle where we cover the whole body of the negative candle with a positive candle, and we break outside of this range. So it gives us an opportunity to get long, tight stops or tightish stops for a swing below those, and to play the rotation back higher. And that's the swing we're in. And very important here at highs, because if we break, then we could really get some momentum to the upside. And what I like to the upside in terms of much bigger swings are these two levels we have circled here, which is 133 and 139s, because not only are these 139s here previous swing high, not only are these 133s this previous swing high, but I like the fact that if you look at the measured move from this whole second part here on this weekly, the 50 back that got sold right here, okay, got sold right here, double bottom, higher low, higher low, higher low, then I think if we get swinging, this level should be a magnet zone and a pivotal area. So this is a much broader chart, but I think we've got a chance, and the trade's looking quite interesting, you know, risk-free, and let it play out. So I think that this is the way we were looking at the chart for the guys who were curious about it, okay? So, and again, finally, just remind you again, I'm really not making any trade calls or recommendations. I'm just trying to highlight the way I look at the charts, give you some levels to look at going into the week. I hope it can help you. I'll post this on the blog and on YouTube. So have a great week, and see you guys for London Open, okay, guys? Have an awesome one. Take care. Bye.